Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. In equity markets, they are pulling back just a bit. Yeah, the S&P did hit 3023, which was our next key resistance level, as well as the NASDAQ hit 8,000, which we had as a major three-star resistance going into yesterday. The tape has had that breakout. It's a matter where this pullback can they hold where the supports are, remain constructive, and stay in breakout territory. Putting a little bit of pressure on things is actually better than expected retail sales. We've seen the odds for a Fed rate cut for 50 basis points later this month sit really right at that 30%. It was as high as nearly 33% before the retail sales, as low as 26% afterwards. Not a whole lot of big movement, but yeah, the equity market and treasuries, they are really keeping, well, the equity market's really giving a pulse on what this is. And the higher those expectations for 50 basis points get, the path of least resistance becomes clearly higher, easier for equities. So continue to watch that. We're keeping a pulse on it. You should too. Overall, though, again, you got to see where these support levels come in here. The S&P is down below yesterday's low, 3012, 3015 support, and then the NASDAQ, 7961. You got some support there, but we have levels below there. Check them out there on the Morning Express. Now for crude oil, it's just sort of consolidating. It's struggling to regain $60, and that's not a good sign. On the positive note, 59 is held. 59.18 was the low overnight. That's right where our rare major four-star support level is. Now, yes, yesterday I did say we're buyers in crude oil until you see it close below 59. But as we're getting closer to inventory data and we're not seeing crude respond the way it should have, it did begin to respond and start to move off that overnight low, but it could not regain 60, as I said. So as it's remaining sort of a dull tape, we are starting to heighten a little bit of caution on this, reducing our bullish bias as we go into inventory data. Now, we do expect inventories to help the market find some support. They've been trending lower. You're seeing larger drawdowns. Last week with the storm, looking for their expectations of a little over a drawdown of 3 million barrels. So look at it. Look at that. It does set a bit of a bar, though. So kind of keep all that relative as you're trading. And then lastly, gold is slipping right now. It has moved below that 1408 mark, major three-star support. We have said it's okay to go below there. We want to see it respond on 1401, 1403, and really ultimately stay tethered to 1408 on a closing basis. However, 1420 was the high overnight. It's another failure to get out above there. Yeah, of course, the retail sales data, better than expected. Less business inventories, which is better, has all helped strengthen the dollar today. It's weighing on gold. Silver, though, shook that off. Silver did trade to the highest level since mid-March. Platinum, the highest level since mid-May, shaking that off, but they're starting to come in now as gold is moving lower. Silver did get that Tuesday 9 a.m. Central Time volume that gold has seen in the last 2 weeks. But again, you're seeing silver start to fall back from that above 1570 move. We really want to see silver hold 1550, and maybe it can help gold find some footing as well. But give us a call. We're here to help talk about anything on the board, 312-278-0500. You can email us at info@bluelinefutures.com. You can check our website for updates. You can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss. It is not suitable for all investors. Thanks a lot.